Okay, what's up, traders? I'm here with my good friend Brad, part of the Edgefield team as well. We're going to speak a little bit about live trading, Brad's kind of story, how he got into his trading journey, and then also just on his group Phantom FX, right? Phantom Trading. But yeah, Brad, good to have you on. If you can just introduce yourself to the audience, and then we'll get into it.
Yeah, good to be here. I'm Brad. I've been trading for nearly 10 years now, and I'm the founder of Phantom Trading.
Nice. Yeah. Okay, so you've been trading for 10 years now, Brad. Okay, so where are you based at the moment, if you can?
I live in Canada, live in Ontario.
Nah. Okay, so you guys are going into summer at the moment there. We going into winter, but it's kind of always summer full time here in South Africa. But okay, cool. And kind of what markets give me a little bit of backstory how you kind of got into your trading journey, if you can.
Yeah, for sure. So about 10 years ago, I got into wealth management with the Scotia Capital Group, starting to learn how to invest people's money, manage portfolios, things like that. I actually had a potential client at the time mention trading Forex, and my mentor, being part of a bank group, had basically alluded to that trading Forex was gambling. And that struck me as odd because it was like, hey, that's trading currency. But obviously for a lot of people, Forex trading was deemed gambling, earlier. So, I didn't really think much of it. And then once I got out of wealth management, went back into accounting and finance, didn't like working on commission at the time. I decided to, get into stock trading, realized, it's probably a little bit out of my wheelhouse in terms of costings, things like that. I didn't have quite enough money to get started. So I thought to myself, hey, that client had mentioned Forex trading. Let me do some research on that. Did some research, found out about CFDs, the fact that you could use leverage and you weren't bound by pattern day trading rules or anything like that, and went, hey, this makes a lot of sense to get into. Actually, a good way to get into trading, unlike what stock trading was when I was looking into it, and just kind of fell in love with the process and haven't stopped since.
Nice. I love that. So, and give me so you obviously started Phantom Trading as well. Are you day trading, swing trading, or is it kind of like a mixture? What do you teach over there?
So we primarily focus on day trading. I'm the type of person that likes to be in and out of trades fairly quickly. I like to hold just within the day. I've never been a fan of holding through rollover or spread hours or into like Asia session or while I'm sleeping. It's just never been something that I've been a fan of. So I like to trade New York Open, hold until sometime in the afternoon at the absolute latest, and then usually cut my trades there.
Nice. Okay, cool. And in terms of, obviously you've been in the game for a while. I've been trading for coming up on 7 years now, I believe. Yeah, 7 years. So when you started trading, you're obviously trading your own capital. What are your thoughts on these prop firms now? Because I know that you kind of, what are your thoughts on the prop firm space at the moment?
Yeah, so when I first started trading, prop firms weren't really as popularized as they are now. So it was a lot harder to scale your capital. In a lot of cases, you're just trying to flip accounts, which, as we know, doesn't really work for really a long period of time. I had a few investors, but then obviously transitioned into being able to take advantage of props. I like the prop space. I think it's never been a better time to be a trader with the opportunity to get low risk capital. You only pay a few $100s for various challenge accounts, pass them, get funded, all sorts of that. So the risk to reward on them is fairly low. Obviously, with the development of the prop space over the last couple of years, it's been a little bit questionable in terms of which firm you're working with. You really have to, do your own research, be diligent, find out if the firms that you're potentially looking to work with are actually paying out traders. There's not any weird anomalies, things like that. But, as long as you do your research, find credible firms that have been around for, longer than a couple months or something like that, or aren't trying to like pretend like they're changing the industry. Because let's face it, any firm that's come in saying they're going to change the industry probably isn't around anymore for that. So I think they're great. Just sticking with kind of like the big ones like FTMO, if you're on the currency side of things, makes the most sense. But I think they're great.
Yeah, I agree with you. I think, like, obviously were you involved when my Forex funds went down by any chance? Were you
I wasn't with them, but I did have a lot of students at the time that were funded by them, had received payouts. Okay. One of our students was interviewed by them and everything, had lots of payouts. And then unfortunately what happened there happened.
I mean, yeah, obviously not to get into too much detail, but it wasn't really even their fault. The CFTC kind of came and said, we're investigating you. So, and then they obviously had to shut down. I mean, what you're going to do when they, the CFTC are saying that. So yeah, exactly. That is obviously a bit of a bleak one, but okay, I do agree with you. Like, there are some reputable firms like an FTMO. There are a few others. I've got the links in my bio actually to all of the ones that I think are reputable firms, like even some broker-backed firms as well. So I definitely think that there is some good, I mean, in any business, there's going to be some good actors, there's going to be some bad actors. Okay, so yeah. Brad, also I'm a new father, right? I just became a dad. Kind of give me some advice, or for the guys that are listening now, any advice to traders that are trying to juggle, being a dad as well as trying to day trade?
Yeah, absolutely. So I have 2 kids. My daughter's turning 6 in May and my son's turning 4 in April. So I've been juggling trading, kids, family, trying to, time balance things. And one of the biggest things that I've learned in trading, even before kids, was not to make trading your entire life, but instead to fit trading into your life. And once I started to view trading that way, it became more sustainable. It became more enjoyable. When you spend like every single hour of every waking day focused heavily just on trading, it becomes kind of just mundane. So then once you start adding in kids to the mix, you need to be more present. Obviously, the impact of having, parents that are involved in their kids' lives becomes incredibly important just in their development. But, as a father, you want to be involved. So, my biggest thing is find something that works for you. That's why I really like day trading the New York Open, being done by around noon. It's provided a lot of flexibility for me. I can take both my kids to school before the market even opens, get to my desk. I haven't missed anything. And then being able to pick them up from school at the end of the day. Those are the biggest things. They seem so minor in a lot of cases, just being able to take your kids to school, pick them up, but showing them that you're present is great for them. But it's also something that I, as a father, incredibly enjoy. I talk to some friends who, are working traditional 9-to-5 jobs, and they're unable to pick their kids up. They can't take them to school. They can't pick them up. It's, they're gone to go to work before the kids even start school, or, and they're done well after, and they miss a huge chunk of, their time at home basically. And, for everyone, it's going to be different, because obviously if you are working, you're not going to be able to have time with your kids. So trying to make the most of it, on weekends and stuff like that, spending time with them, take the time to play with them, interact with them, talk to them, listen to them. And it just makes everything so much better, because you can learn a lot just from your kids, really.
Yeah. I think it is like kind of like you kind of go back to like their childhood days, like where things didn't really matter. You kind of can see that in your kids. I mean, obviously my son's actually just turned a month old today. He's a month old today. So dude, actually, it's actually quite crazy that, and I think this is that he's already been a month, but I mean, like this month of training has been pretty tough for me. I'm down on the month of February, and it's been quite, we're filming this obviously beginning of March, but it's been quite tough. I think I underestimated like the routine that I need to get into to kind of be able to still day trade, because like I'm trying to act like it's not there, but it's been quite tough on me, from a adapting point of view. And I think that's something that I definitely need to probably be more aware of, in terms of like, okay, getting used to the new routine, but as you said there, I think that's some great advice. Make trading fit into my schedule, not the other way around. Okay, what assets do you obviously you trade? You being in Canada, do you still trade CFDs, or is it futures now?
Yeah, so I've always had a background in CFDs. My main pair was pound US dollar. Still look at that, analyze it for the community every day. But I have recently, within the last about 8 months, started to transition into futures trading as well. My reason for doing it is for a couple of reasons. One, because futures trading is absolutely becoming massive. It's probably bigger than CFDs, at least from a social standpoint. But the amount of prop firms and the opportunity from there is really great. And another kind of more specific reason is because I live in Canada, and we tend to emulate the regulatory bodies of the US, and the fact that CFDs aren't exactly allowed in the US. And that's why most US traders are limited on the CFD side of things. Sure. It's one of those things where I'm hedging my bets, where if Canada decides to drop CFDs, I'm covered. I've already transitioned to another asset class that allows me to continue to trade. I've seen it already. I used to trade with IC Markets in Canada. They dropped Ontario. I believe they've totally dropped Canada, but I'm not entirely sure about that. Once they dropped Ontario, obviously can't trade with them anymore. So, and then other prop firms have dropped Canada as well. So, just transitioning to futures, I think has been a smart move, at least for, just long future proofing myself.
I like that. You can also you can also though trade pound dollar in futures as well, right?
Yes, you can. Yeah, 6B.
Yeah, 6B. Yeah, there you go. 6B sounds like I'm back in standard 6 or grade 6, but 6B, like they have the classes 6A, B, C. Okay, cool. Nice, Brad. I definitely think that a lot of traders have had to make this transition into futures. What would you say then is the difference between what you like about futures compared to CFDs, and what don't you like about futures compared to CFDs then?
I would say what I like about futures is, when you're looking on the prop side of things, a lot of them are one-stage challenges or straight to fundeds. Execution's a lot tighter. You're not really dealing with spreads, so your executions are a lot cleaner. What I don't necessarily like, if I'm trading, something like 6B, the price action chart, if I compare it to the CFD chart, is a little bit less clean looking. It's just kind of just getting used to the data feeds. And I'd say the final thing, and it's something that you and I talked about a few weeks back, when it comes to trading prop on CFDs, you have a little bit more wiggle room to kind of push your trades a little bit. Whereas with futures, you're dealing with a lot more daily drawdowns and trailing drawdowns and things like that you really have to be aware of and kind of be more consistent in locking in gains, where on the CFD side, you kind of have a little bit more wiggle room to kind of let trades breathe and try to push as much you can out of them.
Yeah, agreed. CFDs. I will say that we actually had we had a debate on stream the other day about that. And I was like, dude, if I can trade CFDs, I'm actually going to trade CFDs. Like if I can trade with FTMO, like a firm of the caliber of FTMO, I'm going to trade with FTMO. I mean, they've literally just bought Rwanda. I mean, do you know how much they purchased? Like it's 100, I think they bought it for about $170 million. That's a flex, dude. I mean, like if I have this, and I know they do actually have like a path to becoming like a actual in-house prop firm trader with them. So, I mean, they are like a very high caliber firm, and say what you want about any other firm. FTMO have been around since 2015. Like they've proven the test of time. They're actually not this fly by night. They've won multiple regulatory awards in terms of like Deloitte Awards, all this type of stuff. So I would definitely say, like, if I'm going to trade with CFDs, I'm going to do that. And from South Africa, obviously, we can't trade futures. But that is interesting. Yeah. Another thing I do get quite often, what do you think about the sizing, for example, compared to futures and CFDs? If I want to risk 1% on my 100K funded account, it's $1,000, of course, if I'm at starting balance. And I want my stop loss on the NASDAQ. Let's use the NASDAQ, for example. I want the stop loss on my NASDAQ to be 200 points, let's just say. On the NASDAQ, I can risk 1%. If I want my stop loss to be 50 points on the NASDAQ, it can also be 1% because the position size just changes like that. And, you got all these risk calculators that can help you with it. With futures, that's not the case, right?
Yep. Yeah, exactly. Yeah, you have a little bit less flexibility in contract sizing. You're basically picking between the micros and the minis. And even then, you're often not going to get it right exactly to your risk profile. You get close, but yeah, you can't be as accurate with position size calculators on CFD side of things.
Yeah, as I said, because futures, it's just a little bit off. As you said, it might just be a little bit more than like you have like a minimum of like you have to take either one mini or one macro. But if you want to trade, if you want like let's just say you wanted to take a swing trade, for example, and you literally just wanted to place one macro, well, the wider you stop, the more you're going to be risking. Whereas that's not the case with CFDs. Let me know in the comment section on the YouTube or Twitter, wherever you're watching this, if you guys understand that. I think a lot of the guys that actually move to futures, they really don't understand that actually CFDs has a big advantage on that aspect, I must say. Yes, you guys have advantage with the spreads and everything like that. It's a lot more expensive to trade CFDs, but I definitely think, I know that the CFDs have that advantage in terms of the contract sizing, where you want to place your stop loss and everything like that. Okay, and yeah, so you got into trading, and now kind of like walk us through like, do you trade full time, Brad? What other things do you do? Do you advocate to guys to trade full time? What are your thoughts on that? I think that's often a big question that I get taught or asked is, should I want to quit my job and trade full time? I know my answer on that. We can speak about that, but what are your thoughts on that?
Yeah, so I have been trading full time for about 5 years now, but I very quickly started to diversify my income into other streams just to provide an actual steady stream of income, because as we know with trading, it can be pretty volatile. Some months you can do really great, other months maybe not so much. And when you got to, worry about putting food on the table, pay your mortgage, all that sort of stuff, those swings can sometimes be detrimental, can cause you to snowball in how you approach your trading. Let's face it, if it's between making a mortgage payment and not, you're going to maybe push the market more than you probably should.
Yeah.
So I do have other businesses, Swift Journal being one of them. It's an automated trade journal and copier, a couple other ones. But when it comes to full-time trading, if I talk to anybody, I actually tell most people not to rush into full-time trading. Make sure you have a solid base, because anything can happen with trading. We've seen it even just in the markets since Trump has come on board in the US. They've been extremely volatile. Crazy things have been happening. The markets, they've been more difficult to trade these last couple months, and that can be enough to really, mess with people's, livelihoods. So if you are looking to trade full time, I would say, be very cautious. And if anything, if you're working full time and making a decent wage or living trading, you're making twice the amount of income, and you have security on both ends. You have security in your trading that if you choose not to trade, you're still earning, your income from your job. Or you also have security where if you're making money from trading and maybe things aren't going well in your job, or you're not feeling so happy about your job, you have that flexibility to be like, you know what, I'm going to look for another job. I don't really care about this job, or at least you can, kind of put your feet up, so to speak. So it kind of gives you more opportunities. Whereas, if you're locked in on just trading, like you have to show up every day, you have to perform, and, any off days can really mess you up. If you need to make $5,000 a month to cover all your bills, and your first trade you make, you're down $1,000. Now you have to make 6,000, and the mental gymnastics that can cause for, I'd say most people is enough to really make it an uphill battle. So I always advocate having other streams of income, having, safety nets, having savings, and really just, it was kind of publicized back when I first started trading that full-time trading is the ultimate goal. It's the ultimate flex. But, the further I get into it, the more it's like the biggest flex is actually having other streams of income and being able to trade to maximize everything else that you're doing, while also having safety.
Sure. Speak to me more about, you did mention Swift Journal. I do remember actually Swift Journal being that they have so it's a journal and an automated copier, like a cloud-based copier. Okay, neat. Yeah, I like that. And you can put it up, you can attach your prop firm accounts. Is it mostly for CFD copying?
Yes, at this point, it's only for CFDs on MT4 and MT5. But once you plug in your accounts on the website, it's all cloud-based, so you don't have to have an EA running or anything like that.
Sure, and no C-Trader copy?
No, not at this point, unfortunately.
Okay, so just MetaTrader. Okay, that's interesting. I do remember you actually, I didn't know that you're kind of behind this. I know that it was kind of with, if I'm not mistaken, with what's his name? Kevin, with that Swift funding as well, and then it changed to MV funded, if I'm not mistaken. Right?
Yeah, Kevin's my business partner in Phantom. And
Swift nice. Kev and I speak quite often, actually. The one time Kev's like, dude, I love the stuff that you post or something. I'm like, bro, you don't even follow me. And he's like, oh, that's awkward. And then, so, okay, Kev. Okay, is Kev your business partner with in Phantom Trading as well?
Yes, him and I founded Phantom.
Copy that. Okay, nice. I like Kevin, the stuff he puts out. Actually, I haven't seen him on Twitter in a while. How's he doing, by the way?
Yeah, he's doing good. He's been pretty heads down, but he's still kicking it.
Nice. Yeah, I actually haven't. Now that you mention his name, I actually haven't seen him on Twitter in a while. He always used to post quite a few informative stuff, which I obviously did enjoy. But
he definitely leans in on the investing side of things, and
But I mean, he always used to post like good prop firms to like notable prop firms to probably stick with, etc., etc. But that is pretty interesting. Okay, nice. I didn't know that. Okay. And where can you find where can we find you on your social medias right now, Brad? Like Twitter is probably the best place, right?
Yeah, so I have Twitter, Wyse Tweets with a Z at the end. I also have Instagram, ASFX.
Okay.
Those are kind of the two platforms. I'm primarily on Twitter, more or less, but
okay. Yeah. I will put those in the link in the description as well. Trying to find Kev on Twitter. I can't find his Twitter name right now, but I'll get it up. Okay, cool. So Yeah, as we kind of wrap here, I wanted to keep this kind of short and sweet, Brad. We'll get you on. Maybe we'll do some live trading sessions together as well. Guys, let us know in the comment section if you want to get Brad. Maybe we can go over some live markets in the future as well. Maybe some past trades. Maybe some good trades that any of your clients, your traders have taken in the group chat from the past week. Do a lot of your traders, are they still your traders? Have they moved over to futures, or some of them still trade CFDs?
I'd say the majority are probably still focusing on CFDs, but I am starting to see a slow transition into futures trading for more people, especially those that are in US based that, are having trouble finding prop firms and stuff like that. So kind of the natural transition. So as I'm sure time will go on, more people will probably diversify and kind of trade both where it makes sense.
Sure. I definitely think I've seen the natural move towards, futures with the guys. I'm with Austin and the guys there. So for sure, I think that's only natural. But any last thoughts before we kick off here, Brad?
No, I don't think so. I mean, just trade smart, trade safe. The markets have been pretty crazy. Don't go full tilts. I think these are the times where, you want to manage your risk accordingly. I've seen it from a lot of people where they're blowing up, and it's just because they're trying to push the market further than it wants to go. So, I'm always a big advocate of managing your downside risk over and above everything.
Yeah. Appreciate your time, Brad, as always. And then we'll look to get some more done with you, maybe some live trading. So
yeah, sounds good. Thanks so much for having me on.
Yeah, 100%.